As much as the silver guru as I am, I think it was one day, but you have to look at a chart. It might have been 2, 3 at the most, but I think it was a one-day event. And in the physical realm, I was in Los Angeles at the time, and every dealer in Los Angeles bid back the offer to $35 the ounce. So the only way that you could get $50 the ounce on that day or days was to sell it through the futures market, or find a dealer somewhere in the country that was buying near that price. Now, I don't know every dealer in the country what they were bidding for silver, but I know all of them, to the best of my knowledge, had bid back. Whether it was as far down as 35, I don't know. But the idea is very important, that there was so much going on in the silver market. It was moving so rapidly that the dealers got very scared, really, about what would happen to the price, how long would it stay up there, and everything else. So if you went in with silver coins at that time, you would get $35 an ounce rather than 50. And then, of course, the price collapsed very shortly after it hit 50. It was the next day, really, so the next trading day. So will that happen again? I don't think you're going to see that kind of a spike. I think you see a higher price in paper terms, but I don't think it'll be a one-day event this time. But I could be wrong on that. But I think there is a lesson. So what you might consider is that if you really want, or if you are anticipating a similar event in the future, then you need to be able to find a way to sell your silver on paper, which I think is a good idea. But you don't have to have a futures account. With all the ETFs that exist, you could short or sell into the SLV as the main silver ETF, or some of the other ETFs. You could use a major silver mining company as a hedge. You could use options or futures, obviously. So there's lots of ways to do it. No one really can pick a top to the exact day. That's a fool's game. That's an amateur's attitude toward the market. I mean, looking back, if you got 35 and then silver was 1027 in March of that same year, you're probably very happy that you sold at 35. Now, I'm not saying that there wasn't a huge spread between the bid and the offer on the day it hit $50. It was. And a lot of people don't know that story, so it's very important to get it out there in the public to ask that question. Again, I don't think you'll see that kind of a spread this time, and I don't think it'll be a one-day event either. I think the top this time will be longer and prolonged. So the difference, if I can continue, the difference between the silver market today and the silver market in January of 1980, or the market forces from the 70s through early 1980, are much different. If we look at the initial question that you asked, what we had was the Hunts and some Arabs were silver buyers, and the price did go to $50, whether it was a 1 or 2 day event. It happened. Well, that happened at a time when there was about 3 times as much physical silver for investment than there is now. That happened at a time when basically only the United States was worried about a currency debacle. That happened at a time when the M1 money supply was probably 1/10 of what it is today. So today you have about 1/4 as much physical silver, a worldwide demand that's never been experienced in the history of mankind, with laptop computers, cell phones, countertops, food processing, water purification, RFID tags, and on, so, all kinds of technologies. And you've got a global financial system where every currency is at risk. And you've got a global investor base rather than a US-only investor base. So I asked the question back to you. If silver did go to $50 on a one-day event in 1980, when basically it was a US phenomena, what happens this time when there's about 25% as much physical silver in a global marketplace for it, not only on an industrial side, but also on an investment side?